Um, Today is August 31st, 2020. Um, this morning, looking at my scanner, there wasn't any stock really up over. I'll say we'll call it 60% for the day. Seems like it's gonna be a slow day. Um, excuse me. But looking at my scanner, the stock GNW um, popped up in my scanner. Um, it was up. I liked how it spiked pre-market, caught my attention. Um, there was a lot of shares available to short. It was about 22 million shares available to short. It has a $550 million float, and outstanding is probably, of course, way higher. Looking at the past history, you can tell clearly here, very choppy all throughout the stock. Very choppy. Um, just a very choppy, messy stock. But I know it's gonna. I know you can fade if it fades to the downside. There's a great chance to profit. But not only that, with shorting choppy stocks, it's best to short at the highest point. If you can't get the highest point, then there's no point of shorting because it's gonna make you do runarounds. So watching it pre-market, I I of course missed this early morning short. I'm trying to get my laptop and the internet to work. I couldn't even see any stocks. So around right here, I got short. I entered a short pre-market for 200 shares at $3.32, and it just started fading. I wasn't really happy with the 200 shares that I got because it wasn't really much money I was making. I mean, like, I should be grateful for every dollar that I make, but I was up like $30, $40, $50, and to be honest, just with all honesty, it wasn't much for me. I wasn't satisfied, but I'm not playing for the money. I'm playing to play my strategies, but it just wasn't enough. So I had more patience. I wasn't taking it seriously, but I did my best to take it seriously. So I shorted, and I could tell by market open it was just gonna start fading. But just in case I was wrong, I entered only 200 shares because if it squeezed up to high day, which is $3.68, I was gonna lose like roughly $40 or $80 actually, which was past my risk. But I mean, I knew it was just gonna fade, so that's why I was willing to take that amount of shares, and it still wasn't enough for me. And I was willing to take that risk because it still wasn't enough for me. So it started fading, fading, fading right here. Um, the whole time I'm thinking about where should I cover, and I wasn't really trying to cover. But right here was where I should have covered. I was up $80, and it was just not satisfying to me nor for me. And I kept thinking in the back of my mind, what if it bounced? What if it has a bounce? What if it has a perk up? What are you gonna do? And I'm like, okay, if it perks up, I need to just cover. But in the moment of it perking up, I'm like, I'll just reshort. I'll add some shares here and reshort it. And my plan started to change, which is not good. But I should have, once I seen it go past this candle, the highest point of this candlestick, or this one, because it bounced or had a little perk, I should have covered right there. But I didn't, and it just started bouncing, and I wasn't really tripping about it. I just looked at it. I looked at the stock. I'm like, okay, here's where it first attempted to bounce and failed. So of course, there's buyers right here, and it's consolidating right here. So there's buyers right here. So I decided I picked this area to be my new risk. So I added an extra 600 shares at $4, at $3, $4, $5, eight. I'm sorry, at 304, 308, 305, and $3. Total of 800 shares. And my risk was 310. You know, um, the highest point here was 310. So if it hit 310, I'm out. I was out. And I did the calculations. If I get out at this point, I'll be up just a few dollars, which is $8 now. And I entered my stop limit at $3.10 for 800 shares. And I just waited, and it pulled back, ended up bouncing some more, and I covered. You know, it's not much of a difficult trade. There's not much really to talk about, but I covered because it hit my risk. I really should have covered right here, but what bothered me was the lack of shares that I had when I first entered. I mean, if I did like 400 to 800 shares or 400 to 600 shares, I mean, that would have been, it would have been a 40-cent gain. 4 times 4 is like 460, 160. I would have been up $160. You know, that's a little bit more satisfying. Not really, but I'm playing. But the main thing is I'm playing the pattern, not the money game. But it's just $80 wasn't good enough for me. But at least I was able to, cover after I added my shares. I was still up on the trade, and I covered when I said I'm gonna cover. And I mean, it's up now. Maybe it's gonna just fade for the rest of the day, but I'm up now. I still have a chance to get in. There's plenty of shares available. I still have a chance to get in, but I mean, to be honest, I'm really tired. I'm really, really tired from work. I want to go to bed. So, yeah. Tesla and Apple just did their stock split. Um, I'm not really too worried about any of these stocks that I was watching, but Tesla and Apple did their stock split. And to be honest, I know nothing about stock splits. I mean, I know a few things about stock splits, whether support and resistance cancels out, but I don't know where to get in the stock at all. I don't know where to get in. But for me, I know that the stock is overextended. Even if they did a stock split, it is clearly overextended. I'm not getting. I want to invest because I have some capital set aside, and I want to increase it so I can hurry up and get out of the PDT rule. But I'm gonna treat this like a penny stock. If I were to get in right here, go along right here, come on, man, you know what's gonna happen. It's just gonna come right back down. So I'm not longing. They did a 5-to-1 split, I think. So the price is still the same. Everything's still the same, and it's still overextended, but not really because the support and resistance is canceled out. So on the upside, there's no resistance overhead, which is good. But on the downside, there's no support as well. So I'm playing a guessing game, kind of. And I don't know enough about splits to really make a conclusion or make a decision. So I'm not getting in until I see it really consolidates. First I need it to panic or come down, consolidate, and show me like a higher low of sign of uppage, and then I'll look to get in possibly. I don't know how many shares I'm gonna get in. I don't know my risk yet, but I'm definitely not getting in. A friend of mine, Jason, he went long 20 shares at with Apple for 125. We'll see how it plays out for him, but for me, I'm straight.